Hey traders, welcome back. Today is Monday, October the 3rd, 2022. This is our weekly trading preview. It's an overview of the trades that we're looking at taking in our trading room this week. It's also a little bit of an insight into what I'm seeing in the marketplace this week. Okay, let's go ahead and get into it. Again, this is for the week of October the 3rd. We're starting off a month of October. Seems like the year has gone by so fast. And there is, again, some continued activity this week that I think can set us up for some pretty decent opportunities. If we take a look at the weekly matrix for technical analyses, now again, this is a matrix that we look at every single day in the trading room on a daily basis, but this is broken out a little bit further to a weekly basis. There's a couple of interesting things I think that you see. Again, we see this pivot point of about 37.50 that seems to come in fairly strong. Now, I am a big proponent of the Woody's analyses, and that's a little bit lower at 37.35. But wherever you want to set that, right now on Monday morning, October the 3rd here, I'm looking at the S&P, or excuse me, the E-minis at about 3,600 as we sit right now. So it's 100 plus points, 150 plus points higher than where we're at right now. That's a lot of work for the bulls to get back even to where we would talk about moving back to a bullish stance. Of course, you look at almost all of our technical indicators here, and they all are in sell mode. All of our moving averages, and this is always interesting. When you have all of your simple as well as exponential moving averages all the way from 5 to 200 in the same mode, whether that's buy or sell, that's a pretty strong indicator that you're not going to get a immediate reversal. That if we are in the case of where we are right now, which is sell mode, it's going to take a little bit of work to move that back around to bullish, and vice versa. If we were in bullish mode, it's not going to flip to sell mode overnight. So there's a lot of work here for the bulls if they do want to get back. One of the things that we are starting to finally see over this week versus the past week is we are getting a little bit into the oversold category. The Williams percentage R, I do look at that pretty closely, as well as RSI. If you break the RSI down to a shorter time frame rather than the 14 period, you'll start to see that it looks a little bit oversold as well. No trend ever goes straight up or straight down. We do have ebbs and flows, and we've had a pretty strong move to the downside here for quite some time. So I do think that we are due for a pop. However, let's be very, very clear here that the mode is simply down right now. There's no question about that. We start to look at some key support and resistance areas, and I use the futures contract for that so that we do have continuity through the evening. And again, just a couple of quick things that we point out very quickly. Not only is our point of control and our VWAP quite a bit above where we are right now. Again, that's sort of referencing what we would talk about as a pivot point. But we're also now substantively, I would say, below the June lows. We continue to look like we're headed lower. Again, a lot of our technical indicators here, obviously, while they are in sell mode, a lot of them don't necessarily look that oversold, that over pushed to the downside. We don't have it across the board like you usually see where we are due for a snapback, where all of them are into the oversold category. We are starting to get, the ultimate oscillator. I do like that indicator quite a bit. We are starting to get a little bit of a turn there. And again, I think that with the couple of weeks that we have had here in this slide, that we are sort of due for an upturn, but it doesn't really change the overall perspective of the marketplace. As we start Monday, I'll tell you that my levels here for resistance and support, I think, are pretty straightforward, pretty simple. Again, we're sitting almost right at 3,600 right now as I type this or talk on the E-mini. So 3,600 is a resistance level, 3,630 above that, 3,665. And then, of course, the big ones at 3,700 and 3,725 that we've hit a couple of times and not really been able to break above that. So again, I'm looking at maybe 3,600 on the upside, 3,630. Excuse my horrible skills here at writing on the screen. 3,665 would be another level. And then ultimately above that, we've got the 3,700 and then the 3,725. That really, 3,700 is a big one, but if we could break above that 3,725, that would not necessarily signal the all clear for bulls, but boy, it would certainly change the trend here in a demonstrative way. On the downside here, obviously we're sitting right on that 3,600. And that's going to be, I think, a critical demarcation point for today on Monday. Below 3,600, we have 3,575 would be the next level down for me. And then 3,530 down below that one. And then, of course, the big one is 3,500. And when you start getting below 3,500, starts to get pretty dicey. That's sort of a lookout below sort of scenario there for me. So those are some of the numbers that I'm looking at here for today as we get started. Our monthly sector rotation is a little bit longer term. It takes about a month and a half for these numbers to rotate through. So we're still a couple of weeks from getting the September numbers in here. But it is interesting, again, that I think obviously real estate has been hammered here. We understand the idea there with interest rates rising. But healthcare also has been the area that has been hit the hardest. And we do have a trade going on that has sort of taken advantage of this, or is at least trying to take advantage of this with a reversion to the mean trade. We'll get into those in just a second here as we look at our weekly trading activity goals for the week. But those are the areas that I'm looking at for potential value. I think that real estate probably has quite a ways here still to go before we start to get a bottom there. Interesting to look at the heat maps, though, from 1 week to the next. This is 2 weeks ago right here, and then this would be last week's. You are seeing some green shoots in a little bit of the market here. There's a little bit more green than what we had 2 weeks ago, as the market, I think, does try to find a little bit of support here. We'll have to see if it can come through with that this week. But I do think that you're seeing that the market is trying to find some support. This is, again, a weekly heat map rather than what we sometimes look at in the trading room, which is a daily heat map. Week over week performance, this is 2 weeks ago. Again, the market was pretty darn bloody 2 weeks ago. Last week, it wasn't much better. I mean, that's, you know, when you start looking at a almost 9-point slide in a 2 week period of time on the NASDAQ, that's a pretty big move. That's a pretty substantive move. Even the same thing with the S&P, you know, you're looking at almost an 8-point move. It starts to get pretty substantive. And again, generally, those types of moves, even if they continue from a trend standpoint, you usually do have some snapbacks taking place in those. So we'll have to take a look this week. I think that is something that's sort of on my radar is, number one, clearly understanding that the trend is down, but number two, expecting and anticipating that we may have some snapback rallies here and there. One of the things we look at is the put-call ratio and whether or not the put-call ratio is above or below 1. That generally does determine market sentiment, and you can see that we are sitting right about $1.10. So we're still above that 1 level. There's still a little bit of, you know, anticipation, I guess, that we've got some bearishness ahead of us. You'll see that here a little bit as we go forward here with the expected move in the marketplace. Last week being 123, this week it is 121. That's enough, my friends. That's enough. Anything above 110 usually gives us enough premium to be able to be quite effective in being able to get or generate the return potentials that we're looking for in our trade. And that's really, that's all we look for in the marketplace. We don't really care as traders whether the market's going up or down, but we do need that expected move to be a decent size so that we can get the premium that we are hoping for or looking for. Beyond our expected move this week, there's a couple of other things that I always like to look at, and one is the heat map, the volume heat map, where the activity is. We're going to take a look at this in a little bit different view with regards to just general open interest levels, but I do like the graphic that the heat map gives us. And you do see that we have basically fallen through this clear space, this white space here that I've been referring to for the last several weeks as sort of a vacuum. We've pushed right down through that, and we are starting to get back now into some open interest area. Again, this doesn't always, you can see here in the past, right in here, right in here, right in here, right in here. This doesn't always equate to a bottom or a supportive move, but you can see how there is a pretty darn good correlation there. If you go back into the past, as you start to see some open interest develop in these areas. And so again, I would not be surprised to see us get a little bit of a bounce or a supportive move here with regards to that. We do, of course, look at the fear, greed, sentiment. It is a contrarian indicator that we use to sort of find bottoms or tops, and it is interesting that we are still in that extreme fear area. That's about where we were a week ago. But it is definitely pushing to the extreme area where, again, we would generally start to look here for a little bit of a rebound. We do look at open interest, and again, this is, I think, a different sort of visual representation of what we were just seeing there on the heat map. A couple of quick things just to look at here is obviously that the action is still on the put side. Now, that's important information for us to know with regards to getting our 0 DTE trades set up on a daily basis, because obviously we're always trying to enter our trades on the strong side, but that doesn't always work if there's no premium on the strong side, and the strong side happens to be the call side. And that's one of the challenges that we're facing right now. You can see that most of the activity is on the put side. Some of the big demarcation points are pretty obvious. They're ones that I've already pointed out as pretty big levels for me. You can see that 36 sort of 55 area is a big level. That 3,700 area is a big level. Getting above 3,725 I think would be huge for the bulls. Of course, the 3,600 level is what's in play for us today right now. And down at 3,500, you've got some huge volume, some huge activity as well. So again, I think those levels are pretty clear and consistent. 3,600, 3,630, 3,665, 3,700, 3,725 up on the upside. That's for resistance levels. That's where we're looking at. Down on the downside, again, I think 3,600 is what's in play today. Down around 3,575, you start to see some breaks, I think, taking place. And then 3,530 would be a big, big area down below in this area right in here. And then below 3,500, you get starting getting down in here below 3,500, and I think it's lookout below. I've said for the last 2 weeks, I think if you're looking at ultimate downside here in the market, for me, it's 3,250. So we're at 3,600 now. It's a few points down on the downside still that I think we could have some potential. We are still looking, about only 3% of the S&P 500 stocks are above the 50-day moving average. And that's certainly doesn't bode well for a very strong, consistent rebound right now. We look at our activity for the week, and for today, Monday, we do have ISM manufacturing coming out at 10 a.m. Eastern time. That could be potentially market moving. We do have, obviously, on the agenda for today, Mondays, they're usually always busy for us. We've got our 0DTE index trade that we'll look at putting on today. We're going to reinitiate our IWM weekly credit strangle trade. We'll be restarting our 4 DTE SPY and Q trades. We've had some tremendous success with those over the last couple of weeks. And we're going to be re-entering our PayPal credit strangle today. So busy day, as is usually the case on Monday. Our Theta Ferry trade, we'll be looking at putting that back on. It has been an awesome start already to the week. We put one on yesterday, Sunday evening. Didn't last too long before it hit its take profit level, another $100 under our pockets, under our pillow. So let's hope that we can continue that string. That's been an absolutely just awesome addition to our trading room. Tuesday, we're looking at a couple of items on the agenda. We do have Fed speak starting at about 9 a.m. Eastern time. That goes for quite a bit. Few speakers going to be in play there. We've got factory orders coming in at 10 a.m. Both of those could potentially be market moving news. We're going to be in the scalping room on Tuesday, scalping the E-minis. We're going to have another 0DTE here in the live trading room. We're going to be working on our DIA trade. We've got a little bit of work here to do on that trade. We're going to be adding the cover back on our healthcare trade, our XLV trade. And we're going to be working on our pairs trades. We have 2 of those still remaining that are open and working. So we've got a little bit of touch-up work, a little bit of additions that we'll be working on Tuesday's market session. Then, of course, obviously, overnight, once again, we'll be looking at the Theta Ferry trade. Wednesday, we have ISM numbers coming out on the PMI. We've got crude oil inventory coming out in Bostic. The Fed member speaks at 4 p.m. right around the close for the market. I don't believe that obviously should be market moving, but he is speaking. On Wednesday, we're going to be looking at another 0DTE trade. We're also going to be looking at some potential commodity trades on Wednesday. We're going to be looking at a nat gas trade, a wheat trade, and potentially a soybean trade. I don't know that we're going to get all 3 of those on, but that's what's on the agenda for us on Wednesday. And then, of course, again, the overnight trade, the Theta Ferry trade, we're going to look at that pretty much every day this week, I believe. Thursday, we've got jobless claims coming out as well as nat gas numbers and Fed speak starting at about 1 p.m. Eastern time. A lot of stuff on the agenda for our bonus day on Thursday. Obviously, we'll be looking at another 0DTE opportunity. We'll be in the scalping room all day, scalping the E-minis. Looking at the Rev trade, we've got a Rev trade that is tremendously profitable for us, but may have potentially run out of juice, and we may have squozen everything out of it that we can. It expires on Friday, so today, this Thursday, is when we'll be looking at seeing what, if anything, we can continue to do with it. Our SFIX trade, we'll be working on that. And then we will be adding our ladder trades once again to our gold and our oil positions, as well as the overnight Theta Ferry trade. Friday is unemployment numbers, non-farm payroll, and Fed's Williams speaks. So could be a busy morning on Friday with those potential announcements. Going to be focusing mainly on our 0DTE on Friday. Fridays we're usually pretty worn out by the time that rolls around, so we try to just limit the trade to our index trade and potentially anything else that we just need to clean up on that day. We always take a look at putting on a potential Theta Ferry trade over the weekend. However, it is, I think, rare that the premium is justifiable enough to make that make sense for us. But it's something that we always want to take a look at. So that's sort of the trading activity that we have lined out for this week. Let's take a look at our updated performance results on our 0DTEs. We did have a loss. We took another loss on a 0DTE this past Friday. So of 120 days, we've taken 184 trades. 177 have been winners, 7 have been losers. We don't have any open or rolled zero DTEs in play right now. As always, make sure that you do follow the private video link inside of our Discord. Go to the top of Discord, hit the pin, and you can watch a video review of each one of those trading sessions. Our 4 DTEs, we have had some amazing success with those the last couple of weeks. Not just the fact that they were winners, but they were quite a bit above average in terms of performance. 115 wins, 7 losses. Our IWM weekly credit strangles continue to chug right along. 41 of those trades in total that we have done, and 41 of them have been winners, no losers there as of yet. Our pairs trades, we did book a winner last week on our pairs trades, so we do still have 2 of those working, and we'll be continuing to work on those 2 trades this week. No new bear market trades for the past week. We did add a positive Vega spread using the DIA. We have 7 of those in total right now. Some of them are still working, obviously, as you would imagine with a ladder setup, but so far we haven't had any losers in that category. Our Tuesday, Thursday zero DTEs, where we try to make sure that we get a butterfly in. We've had 39 winners, 1 loser so far this year. That's been a good category for us. Scalping was a great week last week. I was able to do some, I guess you wouldn't really call it scalping. I got some long positions in there, and I was able to cover those and generate income off of those. But regardless, it was able to generate some pretty decent profit over the week. So that ended up helping quite a bit this past week, where we had a zero DTE that didn't work. That was a loss. No new dragonflies for the past week. Next week we will probably be looking at maybe 1 or possibly 2 new dragonflies. So we'll try to get those up and running here. We did actually end up booking a profit on this last dragonfly. Sorry, I didn't get that updated here. So we do have 4 total winners in that category now. Still working the SSO trade. We'll update that here when we get a little bit more data under our belt. We've got 31 total Theta Fairy trades. These are obviously adding up pretty quickly when we do 1 a day. Or at least we've been averaging about 1 a day here. We haven't had too many days that we've missed on those. 30 of them have been winners. 1 of them have been losers. That's been an awesome addition to the trading room. Our gold ladder, we're up to 6 winners now. No losers there. Again, there's a few of those that are still open, as you would imagine with a ladder trade, but none of them have resulted in a loss as of yet. Same situation with our oil trade. We have a few of those open. We did book a small loss on one of our oil trades last week that unfortunately we really didn't need to do. But margin requirements changed dramatically in the CL and the futures contract. I wasn't able to get a new one on that made a lot of sense to make up for that one. And that was my bad. If I would have known that, we would have just left that one on. But we'll continue to work the oil trades. Our investing program, the asymmetric trading system, continues to do really well. We've given a little bit of our profit back over the last couple of weeks, but we're still up about 14% year to date versus about a 25% loss in the market. Obviously, that is a tremendous outperformance. We're beating the market by about 51% on alpha, and that's just been fantastic. If you're not a part of the program, we do have a free trial. You can jump in and check it out for free. If you are looking for trading opportunities, our live trading room is good for experienced traders. If you don't know how to trade, probably not a great place. You'll be lost. But if you do know how to build a trade and you need a system, you need a business plan, you need a one-on-one mentor, or you want to trade some higher level strategies that you're not familiar with, or maybe just simply move beyond zero DT, it could be a good fit for you. If you're looking for a place that is completely transparent in their trades and documents everything that they do so that you can see a documented history, that's probably an important thing to have. Also, we have 22 different trading strategies well above and beyond a zero DT. We don't just trade zero DTs. We also trade dynamically rather than static. We do have, I think, 3 or 4 of our strategies that we use that just use a straight up stop loss. But most of them we trade dynamically, where we will adjust them before we ever take a loss. And last but not least, zero DTEs that have at least $1,000 a day of profit potential in them. There's a lot of ways to trade zero DTEs. You see a lot of people trading just standalone butterflies, for example, right now, but of course there's no real profit potential in those as just a standalone. And then last but not least, we do have a 200% no risk guarantee, double your money back. Basically, if you get in your first month, you don't feel like it really is the most amazing trading room you've been a part of, and you have followed our requirements for participating in the room, I'll give you I'll give you double your money back on your first month's subscription fees. The asymmetric trading system. This is not for in traders. This is for investors. It's a passive system. It just takes 5 minutes a day. Couple of simple portfolio adjustments every day. You set it and forget it. If you're worried about risk, or you are really wanting something that outperforms the market year after year, this would probably be a better fit for you if you're interested in those. So I will leave a link in the description box below for both of these trials if it's something that you're interested in. Thanks for checking us out, guys. We will see you in the trading room here in just a few hours.